In today's video, we're going to dive into some big predictions by the CEO of Ripple for the crypto market by the end of this year, alongside some predictions by Gemini's COO for the price of Bitcoin. Let's kick it off.
Ripple CEO Brad Garlinghouse forecasts that the crypto market will double in size, hitting $5 trillion by the end of 2024. Speaking with CNBC, Garlinghouse cited factors including the upcoming Bitcoin halving and the arrival of the first US spot Bitcoin ETFs, which he said is driving real institutional money. One of the other factors that Garlinghouse sees pushing the crypto market to new highs is the possibility of more regulatory clarity in the US. Under the leadership of Gary Gensler, the SEC has been aggressive in its enforcement on crypto companies, including Ripple. The agency sued the crypto company back in December of 2020, alleging it illegally sold XRP in unregistered securities deals. Ripple denies that claim and is fighting the suit. But remember, 2024 is an election year, so crypto hopefuls are optimistic that the next administration will be more accommodating to the industry. Now, Garlinghouse isn't the only crypto bull predicting outsized gains for the crypto market in 2024. Gemini's chief operating officer recently told CNBC that he expects Bitcoin's price to rise to $150,000 later this year.
And big thank you to Bank XRP for sharing this. This was originally shared by CNBC, highlighting Brad Garlinghouse's expectations for the crypto market to reach $5 trillion this year. And what's so exciting about the size and the valuation of the crypto asset class today is comparing it to other markets and other asset classes. For Brad Garlinghouse to be calling for the crypto asset class to reach $5 trillion in market cap by the end of this year, I think it's possible, considering the cloud market is already a $5 trillion industry today. Cloud is for cost savings. Blockchain, however, is both cost savings and revenue generation. And looking at the total crypto market cap from the 2017 Bitcoin all-time high and 2018 altcoin highs to the cycle low, and looking at the performance of the market overall during last cycle, drawing a Fibonacci retracement from the cycle high to the cycle low and looking at the cycle top, the crypto asset class reached a 3618 Fibonacci extension, crashed back down to the 1618, and later topped out around the 4.236 at a $3 trillion all-time high. And during the following bear market, we crashed back down and somewhat back-tested the previous cycle high. We can also see the 8 Fibonacci extension is just over $5 trillion. Looking at the total crypto asset class today and drawing the same Fibonacci retracement from the previous cycle top to the cycle low, we can see different Fibonacci extension levels. So we're at the 786 Fibonacci retracement today. Over the past several cycles, 2013, 2017, and 2021, we've reached golden extensions, but we're seeing diminishing returns gradually. So if we reached a 4.236, that would be a $10 trillion market cap. If we reached a little lower, the 2618, over $6 trillion, we have $5 trillion, $4 trillion, and $3.6 trillion. And we're already well aware of the projection for the crypto asset class in the future. Even Ripple and Medico right here taking on the crypto custody market, expected to reach $10 trillion by 2030. Taking a look at the global GDP on the IMF Data Mappers website. So global GDP today is over $109 trillion. And giant firms like BCG have reported that the total tokenized market is to be 10% of global GDP by 2030. So this is the global GDP today, $109 trillion. That's expected to grow as money just keeps getting printed. And 10% of this number today is around $10.9 trillion. And the question we have to ask ourselves is, what will the value of global GDP be by 2030? Will it be $120 trillion? Will it be $150 trillion? Because 10% of that value is a lot bigger. So we already know the value add that Web3 brings, and what's interesting, shared by the CEO of Casper Labs, is that 5 to 9% of worldwide GDP is just verifying that things are trustworthy, and we can do that in an automated and intelligent manner using blockchain. You have some level of transparency, some level of privacy, you have an audit trail, you have better uptime and redundancy, and it can be provably secure. And the biggest value add is disintermediation, getting rid of all of the middlemen, all of the fees that come with that. And just overall, a much higher degree of efficiency and automation with smart contracts, if and then statements. Generative AI, IoT, and even supply chain tracking the provenance of all types of products. We have to realize this is a massive tech shift. This is bigger than the rise of cloud, the rise of Linux. This is Web3. And I know we have some really cool retail-facing applications today and some enterprise applications, but the enterprise market for blockchain adoption is the largest market in the world, and it is the most untapped or least penetrated. The future is going to be multi-chain. There will be public networks, there will be private networks, and there will be hybrid networks, a blend of both. We're seeing some of these crypto networks get some decent level of adoption, but we are still in such early days, being connected with ERPs, CRMs, and databases. As an example, Hedera Hashgraph has billions of transactions. And the bulk of these transactions on Hedera's mainnet are through Hedera's consensus service HCS, with one of their biggest applications connected with Avery Dennison for Atma.io tracking over 22 billion items, assigning unique digital IDs to everyday items, with end-to-end transparency by tracking, storing, and managing all the events associated with each product, all the way from source to consumer and beyond. And Hedera is just an example today, working with some very large organizations across the board. We have Dell, we have LG, DLA Piper, Deutsche Telekom. And Hedera's token HBAR is the utility token of the network, so every single transaction requires a very tiny amount of HBAR. And in each bull run, we have seen some altcoins reach crazy high valuations, and the craziest part is it's not enterprise adoption at scale. The floodgates have not opened. We're working on regulatory clarity in a variety of jurisdictions, but this seems to be volume flowing in and out of this asset class every few years in line with global liquidity, or the Bitcoin halving, or the elections. Whatever the narrative is, it happens. So we've seen Bitcoin surpass a $1 trillion market cap multiple times. We've seen Ethereum's all-time market cap at over $570 billion. And we've seen other altcoins grow from a sub $1 billion market cap to 10 billion, 20 billion, 50 billion like DOT, even closer to 80 billion to 99 billion like Cardano. And I believe the crypto asset class is here to stay. I know Kevin O'Leary believes it will be the 12th sector of the S&P. Of the winning networks and the winning applications in the future of assets that exist today or new assets that will be launched in the future, what would their valuation be, or what could their valuation be in the future with actual adoption? And that's the game we're playing in this speculative and nascent asset class. Next up, live from Paris Blockchain Week, a quote from Brad Garlinghouse. It's not about the 100,000 developers already working on Web3. It's the 20+ million developers who are yet to work on Web3 that's truly exciting. This industry is not going away. It's events like Paris Blockchain Week that keep growing for this reason. So around 100,000 developers today and over 20+ million developers globally. And when you think of Web3 users today that are using crypto, 300 to 400 million people globally. There are over 5 billion internet users. And I still argue, out of the 300 to 400 million users today in Web3, how many are really using Web3 to its full capacity? Looking at the number of monthly active users on different chains, we're not anywhere close to the full potential of even our 300 to 400 million crypto holders today. Some people in crypto might just be buying some holdings and putting it on Coinbase. Not everybody is doing DeFi lending or leveraging an automated market maker and using Web3 to its full capacity. And even as a US resident, I still have trouble doing everything I want to in DeFi or even just accessing some assets that might not be available on a DEX. So if us retail investors are having trouble, imagine how difficult it is for enterprises to even dip their toes in the water without any type of clear guidelines. And I'm referring to the US. I know many other jurisdictions, even the European Union, is moving forward with all types of KYC and regulation for DeFi. In the past couple years felt just like the movie Groundhog Day. You're waking up in 2022, one of the worst years in crypto, multiple black swans. The SEC's add another group every single time. Bank failures, FTX corruption, Luna corruption, all types of stuff. And regulators, at least in the US, of course backed by mega banks that have their own interest, point the finger and say it's blockchain's fault. Next up, we have this great thread put together here by Lachlan I wanted to go over. So RippleX Dev recently announced their partnership with this group. I'm just going to pronounce it ZoneX Inc. And they're a Silicon Valley-based leading tokenization platform as a service, known for its unique tokenized asset lifecycle management solution. He also references the benefits of tokenization alongside BCG's prediction of reaching $16 trillion by 2030 for tokenized assets. And it's great to see this type of tokenization infrastructure because the XRP ledger is built for this. And this plug-and-play infrastructure covers compliance, primary token issuance, and secondary market management. So he shares some really cool screenshots highlighting some of these products. Highlighting a big range of debt and equity funds, real estate, supply chain invoices, VC funds, private credit, etc. With billions of dollars already tokenized, we know that Aberdeen, at least according to Dan over at Aberdeen, said they've tokenized $20 billion of money market funds thus far. Now we can tokenize money market funds, but we still have to get liquidity to those funds. And this is exciting as the XRP ledger's low fee, high throughput network and institutional focus make them a strong fit for tokenized assets. And ZoneX or ZoneX is a key enabler in bringing more assets on-chain to the XRP ledger, so you can visit their site. So this was announced earlier this year and definitely something to keep tabs on. We're going to finish up today's video with a really good 5-minute video of Casper Network and AI governance attending Raise Summit with over 1,500 global leaders dedicated to exploring the transformative power of generative AI. This video was put together by Rect Vojak. If you're on X, go give him a follow, he shares great information. Whether or not you like Casper Network, that's fine, but they are integrated into IBM's tech stack, and this is an application they're building. So I hope you guys enjoyed today's video. Huge thank you to all that hit the like button and subscribe. We're going to play this clip, and I'll catch you in the next one.
Hi, I'm Ronald Manohar from Casper Labs. I'm happy to give you an update from Paris, France. I'm at the RAISE event, which is primarily focused around artificial intelligence. Really excited to be here. Just wanted to give you a little update about the event. Myself and Shyam Nagarajan, who's the global head for IBM Consulting on AI governance, just spoke at a panel on unleashing AI governance, and reception was really, really good. In recent polling that IBM has done, 87% of companies want to ensure that they have more trust in their underlying AI systems. And that's where the Casper blockchain as a trust layer is an extremely strong augmentation to these kinds of capabilities. As a result, the vision for Casper Labs and the Casper Network was always to find really, really interesting enterprise use cases. And we're really happy that, one of the first products that we're going to create in a SaaS manner is going to be an AI governance product that we're co-building with IBM. Based on conversations that we're having here in Paris, we're really, really excited about the reception, and everyone recognizes the need for this underlying technology. The NVIDIA GTC event, which was, if my memory serves, around March 18th, a couple of weeks ago, was incredibly edifying for us. We actually spent most of the time on the floor talking. I think each of us talked to 20 or 30 companies individually, really testing our thesis and messaging. And what became very, very clear is the tamper-proofing nature of our underlying technology, and the fact that it fits neatly within an enterprise tech stack are really the most evocative parts of what we're building. And it really, really helps that we're partnering with IBM to ensure that the product we build really meets the technical muster that enterprises crave and require. One really big insight that we got is the AI market right now is quite chaotic. Terms are used interchangeably, solutions are given, varying descriptions in terms of accuracy, etc. And I think having a clean, refined, clear value proposition in the market is going to highly differentiate us. So really, really looking forward to putting those insights together and ensuring that our product is the best it can be. Development is ongoing. As the community saw, we first showed the proof of concept of what we developed in November of 2023 on our Gartner webinar. You can still go to our website and view the webinar. So that was way back in November when we demoed that. Coding on that actually had started August of last year. So everything continues. Our business requirements doc is locked down. Our non-functional requirements is locked down. So we're in active development of the underlying SaaS product. Go-to-market, obviously continuously modifies as we get feedback from the market. But in essence, the three things that we said we'd do, which is end-to-end data integrity, the ability for multi-party governance, as well as version control, all three of those are still what we're building. So the good news is all the feedback said that we're essentially correct in where we're going. How we message that and how that's prioritized, we got a lot of insight into that. In terms of go-to-market, we do have, multiple signups for our beta program, and we have a few customers that we plan to debut with this solution. There'll be a much more, look, I can't get into much more detail than that. I can give a specific number. We had about 24 companies sign up for our beta program off of the Gartner webinar. Actually, about 100 signed up. We qualified about 75 out because, they were either a Gmail address or, not a real corporate or something like that. So, yeah, for the next 2 or 3 months, really, we're heads down, focusing on ensuring that we're producing the product that's of high quality. We're getting as much input from potential customers as possible. And of course, collaborating with IBM both on development and go-to-market strategy. That's really going to be my focus for the next 2 months. This and Think, which is IBM's conference in Boston, third week of May, are really the only events I have on the horizon in the short to medium term. All the rest of the time, I'm going to be in New York, just heads down, focusing on getting the product out. So effectively, there's no change at all in how Casper or CSPR is consumed, right? We're just giving the choice, do you want to pay it in fiat or do you want to acquire the CSPR yourself? CSPR will still be used to pay for the gas, even in a, refund it all model, which increases demand for it. It's, think about it as an AWS credit. But actually giving people the opportunity to pay for it in fiat upfront actually really, really expands the potential usage of the underlying public network. I think people have this misconception that because we're selling it as a SaaS product, that means it doesn't affect the public network. That's absolutely untrue. CSPR is still used for gas. It's still used to drive the network. It's just, how do we charge the company? Do we ask them to take CSPR or pay us a SaaS fee? And, SaaS fees are something enterprises are imminently used to. We actually view this as an innovation that could really help drive more transactions to the network. Also why, the Condor release is really, really important, because it gives us that ability to ensure that we can charge in a SaaS-based manner.
If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.